Good evening, everybody. Welcome to this first quarter 2020's edition of On the Move with Chris Blasi and Rich Checkan. Looking forward to a great night tonight. Start off with a little bad news. Unfortunately, our good friend Doc Eifrig is not going to be able to join us tonight. I got a last-minute word from her and from him, and he said, he hate to do this at the last minute, but unfortunately, he's a bit under the weather, and he wasn't going to be able to join us here tonight. So keep him in our prayers. We hope that he recovers quickly. Whatever's keeping him from being here tonight, I hope is resolved very, very soon, and for his sake. And then hope to have him maybe on a future program. But you're in very capable hands, and with Chris and I think y'all know Chris. This has got to be about our sixth, seventh episode at this point. But Chris is a good friend, one of our partners in the industry. We work with him on his patented, revolutionary, extraordinary product, the PMC ounce, that he offers through Neptune Global, company he started, a product he developed and patented about a decade or so ago, over a decade ago. We're firm believers in it. As you know, if you've read our material, Chris brings to the table tons of experience and background in the financial services, IT world as it connects to financial services. He's been mentioned in the who's who of talking heads and financial news programs and publications. Warm welcome to Chris Blasi, my co-sponsor, or co-host, and a good friend.
Thank you, Rich. So thanks. Great to be on again. It's been a little while. A lot of things happening in the world and great things in the precious metals market. For anyone on who doesn't know Rich, Rich is the COO of Asset Strategies International. He's been in that position for, I think it's 25 years now?
Not in that position. I've been here for 26 years.
Yes.
But yeah.
But you've been in a leadership role for some time now, but a lot of experience. Prior to that, he has a very interesting past, having been at the West Point Academy and served in our armed forces, and left the armed forces at the rank of captain, I believe, right?
Correct. Yes.
Excellent. I mean, that's a pretty impressive, and we thank you for what you did. So, Rich went from the world of the military to asset strategies, has been through a number of markets. I think he started in 1993. So we've seen bull, bear, we've seen .com crash, financial crisis of 2018. We've seen the bull market of the 90s for stocks. So Rich has got a really good perspective of precious metals and how they perform in different environments. Now, we'll all concede we're in a different time now. It makes it more exciting, and I think it makes conversations like this tonight even more important, because a lot of what we thought were truisms and fundamentals that you could count on to make decisions when investing are obviously proven to be not working or not reliable indicators or signals nowadays. So with that said, we'll kind of kick things off. Rich, anything else you want to add, or?
Yeah, just highlight for everybody what we're going to cover tonight. So we're going to drive on with the topics at hand. We kind of reach out and get a feel for what our listeners or readers want to hear. And basically tonight we're going to talk a little bit about the current state of the economy. What are some of those things that are going on right now that kind of makes you scratch your head and wonder where this goes in this current environment? What's different now versus at other times, and what's the same? We're also going to look a little bit of a forecast for the balance of the year. Given that environment, what do we think, where do we think investors are going to be rewarded this year? We'll move on from there, and we'll talk a little bit about retirement and some of the I guess, challenges and obstacles facing retirees these days. And then from there, we'll touch on a little bit at the end about, kind of New Year's resolutions and how to set your world in order for 2020, whether it be financial, mental, physical, or otherwise. And then we'll move into Q&A. We've already got a bunch of people writing in with questions ahead of time. I've got a few to cover. And of course, everyone that's listening can go ahead and type them in when the time comes, or leading up to when the time comes. If you hear something, you want to jot it down, go ahead and send it in to us. I hope we're not here all night, but if that's what it takes, I'm ready and able. I think Chris is with me. We like to make sure every question is answered before we hang up at the end of the night. So that's really what we're here for. So with that all being said, Chris, you talked about now things are a little different. You know, what we could expect in the past, given a certain set of circumstances, isn't always happening or playing out the way we thought it would. What is it that's changed, or what do you see that's going on right now that's of import?
Sure. So that is a huge question, and I could spend hours, or we all could spend hours, but I'll just touch on a few things that I think are important, right? So, like to take the world of equities, stocks, right? Look at the overvaluation, right? I worked at Merrill Lynch back in the early 90s. You know, back then you could still use things like PE ratios and such to decide when to move in and out of a stock. That hasn't meant anything for 10 years, 10 plus years, right? PE ratios mean nothing. I mean, a great example is Boeing today, right? Boeing came out with news that was absolutely as bad as it can get. And what did the market do? Slight sell-off, and then it came roaring back and went up in price, right? A buying opportunity. I mean, Boeing's problems are serious. They are not a temporary 1 or 2 quarter problem. I mean, it's really, the president said they may have to rebrand themselves and completely revamp this company. So my point is, and I don't want to dwell on one stock, right? But yeah, old formulas don't really work. Everything is being driven by liquidity, right? We know that. You know, when the Fed talked today and it became obvious, right, that they're extending QE, of course, we're not supposed to quote QE, or where do we stand on that right now, right? We're injecting money.
I think we're calling it not QE.
Yeah, it's not QE, but they're going to inject 50 billion a day into the repo market, which is now out until the end of April. Of course, we saw the precious metals respond positively. So the stock market isn't going down because the liquidity continues to come in. But there are also fundamental changes. Like, let's look at retail. I was talking with a customer today, a longtime guy. He's really has a good feel for what's going on, and it is amazing the amount of vacant retail property, and it's getting worse. And this is during a time when the economy is actually supposed to be doing fairly well. And in some respects and some metrics, it really is. But we have dynamic shifts happening, right? And I'll just talk about retail. It is not a small thing when your retail space is imploding, because the domino effect on that, the trillions in commercial mortgages on those properties, which are all owned by insurance companies, pensions, right? The domino effect of this transition is, I think, far more risky, and it's going to be way worse than I think most people understand. People just talk about, oh, Amazon is hurting brick and mortar. It's more than just losing people at the checkout counter. It is, like I said, mortgages, pensions.
Yeah, the companies that own them, these are the stable pieces of their portfolio, right?
That's what an insurance company,
stuff they can count on.
That's what it is. An insurance company owns bonds and mortgages. That's it. So all the people who have whole life policies, I mean, that's at the end of the day, which keeps your company solvent. So I do believe when people use terms like there's a reset coming, there is a transformation that has to happen. Part of it is from decades of malinvestment, and it's true, it's market rigging, right? There's been market rigging going on. When the financial crisis came in 2008, instead of just bailing out all the depositors, they bailed out the banks, right? You could have bailed out the depositors and let the banks go down the drain, but everything was about protecting the banker. Decades of malinvestment, market rigging. We have all these deformations, and I think they're going to affect the economy, right? The economy can be doing well, but there's so much baggage, right? There's so much bad debt. There's so much malinvestment. That is going to be a drag on the economy. So the end of the day is, I don't think we need to looking at just how the economy is doing as whether we should be investing or not. I think we should put that aside, because we can't use good, reliable markers or metrics anymore. That we just need to look what will be investments that will survive turmoil and another dislocation like 2008, which I believe will happen in the next 18 months.
you have some thoughts on what they are before I chime in there?
It's going to be probably in the area of debt repudiation or the handling of debt through the allowance of currencies to depreciate, or what laymen will call inflation, come into play. I think it's finally, after many years, that this is going to happen. That's what's going to happen. And I will say, if someone says, well, Chris, what's your evidence to that? I will say, this is the evidence. Precious metals, or I'll just say gold. Gold is a forward-looking asset. Prior to 2008, when everyone thought everything was great, that we were in a housing economy, right? Mortgages were being packaged by Wall Street and resold. Gold was going up aggressively. Now, that didn't make sense, right? Everyone said, hey, we're in a new paradigm, right? House prices will never go down. And that's the words from people like Ben Bernanke, right? With all his accreditation and his Ivy League, credentials. He said housing will never go down, but gold was going up. And that didn't make sense, because people don't pile into gold or don't bid gold up when everything else is doing well. But gold knew that that was going to come to an end. And I believe we're in that same situation right now. When gold started its rise again, its ascent 3 years ago, and I will say it's a stealthy ascent, because it's been doing very nice, but it's not, people don't really believe it, where they think it went up a little, but they think they missed the magnitude. But I'll just leave on this, that again.
Or they think it's expensive and not worth buying here. They want it to go back down to 1,200.
Yes.
That's going to happen anytime soon.
It's not. And I don't believe it will, because I believe it is in this period because it is positioning and it's being bid up, because it knows, it's not that the gold knows, it's the people that are buying it. And I'm talking about the big sovereign wealth funds, right? The big money who really understand and see and are sitting at the table, that it's not too far off where we have another financial dislocation. And that's why it's rising. Because the stock market is going up. I mean, it's not like they're fleeing the stock market and have nowhere else to go.
Yeah, we've talked over the years about our clients becoming their own central banks. Pay attention to what the central banks are doing. I mean, you're right on point with this. You put money where you believe it will be treated best. I don't think there's more of an in crowd or a crowd in the know, if you will, insider trading when it comes to currencies, fiat currencies, better than the central banks to make those decisions or to see what's the writing on the wall. And, last year, if it wasn't a record, it was pretty close to the record of central bank sales or central bank purchases of gold, as long as we can, look back. They're buying what they believe will be treated well in the future, and I think they're right. Now, right now, everything's being treated well, right? And it's because of the not QE or whatever the hell you want to call it. There's so much money, so much free, easy money sloshing around the economy right now, that it's floating all boats, right? But that is going to give way at some point. I think looking forward to this year, if you want an indication of where things are going, I think the dollar is where you want to keep your gaze trained, so to speak. We started to see some weakening of the past week or so. It's come back up a tad, but the dollar's on eighth, going on ninth year of a bull market rally. These rallies in the dollar tend to last 7 to 9 years. Do the math. Just like the stock market, it is long in the tooth. And we started to see a bit of a chink in the armor. It hit 99.5 in October, and it got down as low as 96.5 just recently. It's just right about 98 as we speak. A little bit of a short-term rebound. 95 is a number you want to watch. If it gets below and holds below 95 on the US dollar index, most people will say that we have entered into bear market territory for the dollar, and it's overdue. You raised a point about the government's tinkering and intervening, et cetera. I don't think that's something you can just gloss over. I think you're right in bringing it up. The reason I think right now markets aren't as predictable with the old cues as we thought they used to be is because we have tinkered with this so much. All right. When you bring an outside force in and mess with what should be free market forces, it has an impact. And in this case, it seems to be elongating a lot of the cycles that we're used to seeing. And they will still give way. When, I don't know, but you can't stop forces of nature. You can delay them, you can play with them, you can mute them, you can exaggerate them, but you cannot stop them. And eventually they're going to take over. And I think coming, unfortunately, when you tinker like we have in such a massive way, I think the resulting rebound is going to be a little bit more than you probably expect.
Well, and to that point, there's also the expected market dislocation is not really a new one. It's really the continuation of 2008. Everyone expected, and it should have, right, the repriced and flushed out a lot more weak hands, zombie entities in 2008. But it was the Fed stepping in and pumping trillions to keep the banks, certain companies, and the economy afloat, and the stock market back up, buoying it back up. So the point is, we never really allowed the free market to kind of work its magic and clean the slate. So it's the continuation of 2008 that's at bay, that eventually they're going to lose the ability to continue to keep it at bay just through money printing, which is really the only tool they have.
100% agree with you, Chris. When did it become bad to have markets correct? That's what markets do. It cleans out the excesses. Bad business should not be rewarded. Bad business people should fail. Bad businesses should fail. Get rid of the trash. Let the cream rise to the top. Stop tinkering with it. Let free markets do their job, and then it'll be a whole lot more predictable again.
That's because, as we all know, there are no free markets. That's what they mean by market rigging. And that's what we have. I mean, that's why they use the term crony capitalism, right? If I'm connected and I'm a big enough player, I say I'm too big to fail, find a way to bail me out when I should have been allowed to go by the board.
Just fail. Get on.
But eventually it does happen, right? And that's where we're heading.
So as a result, given what's going on in the current economy, all those things that are at play, I personally think that anything that's built to weather any of the potential oncoming storms, and there's a lot of them. We could see a president removed from office as a result of an impeachment process. We may not. But that could happen. We could see an escalation of trade wars, whether it be with China, Europe, or elsewhere. We could see aggression, sovereign aggression from the likes of South Korea, China, Russia, you name it. We could see, a rise in interest rates, although most people right now are looking for the rates to fall further, potentially, and even go negative. And a lot of people think that that's the ultimate plan here. So a lot of different things can happen. We can see an all-out shooting war. Hope to God we don't. As a former military person, I can tell you, nobody wants to see war less than a soldier in most cases. But that could happen. Depending on what plays out is kind of where you want to position your money, if you will, to benefit from that. If we see an all-out shooting war, maybe defense stocks are a way to go. If there's a serious pullback or correction in the economy, maybe you want to go into something that's tried and true and not going away, utilities, food, things of this nature. In every case, I think precious metals are an answer. From this point going forward until the end of this bull market, I absolutely believe precious metals should be part of your portfolio. Of course, I believe they should be part of your portfolio all the time. But right now we have that rare situation where it is there. Gold is for wealth insurance. That is its number one purpose in life, and that is always. And sometimes the clouds align, the market forces align, and you could actually make money with precious metals coming off the lows. And I do think we have one of those opportunities right now. And I don't think the movement thus far from the lows at 1,050 in 2015, I don't think the moves are anywhere near what we're about to see before the end of this bull market. So I do think metals are moving forward. Any other thoughts there?
I agree. I mean, again, to compound the problems, we also, if you have a real problem, everyone needs to kind of come together, right, to fix it. And if you look at the state of our society, it's divided and it's not coming together. It really isn't. I mean, it's like there's no give. Something's got to give, right? But that is not we do not have a good environment for a healthy economy. And when a lot of the problems like the big state pensions start really manifesting themselves, and you know what's going to happen? Illinois is going to run to the feds and say, bail us out, right? You got to bail us out because you can't let all our pensioners. That's going to leave the rest of the country not too happy. Why should we be bailing them out, right? If you chose to listen to a politician lying to you in Illinois because you like what he said, but we got big problems, right? So the point is, to your point, be your own central bank. There's the beauty of the precious metals now more than ever, without the counterparty risk. You can be it's like being sovereign. You have an asset that has a 5,000 year track record, and people think, oh, but that's a negative, right? We're not like 5,000 years ago. There's certain truisms, and this is one. It is hold its value. It continues to hold its value. The people at the table who know what's going on, right? The Russian government, the Chinese government, doesn't matter whether you like them or not. You think they're at the table. They know what's really happening.
Kazakhstan even gets it.
Yeah, they get it, right? So if they're positioning that way, they see this world divided. They see what's coming. We need to do, because no one's going to do it for us. Government's not going to do it for you. They're not going to take you by the hand and say, this is the right thing to do. They have an agenda, right? They are still supporting the ones who've been bailed out. They want you to continue to support the ones who've been bailed out, and the crony capitalists, right? So it's incumbent upon ourselves to do our own due diligence and say, you know what? I'm going to step out of this. I do not want to own an asset that has the counterparty risk, like a stock, which is going to, a stock has all the counterparty risk that it's an operating company. And if the music stops and that thing gets cut in half or that management is incompetent, you're stuck holding the bag. So, precious metals may go up and down, but there's never been a company that's been around for 5,000 years, right? That's what people forget. In the time of Rome and Greece and, 300 years ago, there were operating companies that probably people thought were really dynamic and here to stay. And every single one of them is gone, right? Every one of them. Gold and silver, platinum, palladium, they're still here. I know it sounds simple, but sometimes the right answer in front of your face, and it is simple, right? Get away from the complexity. Everything else is too tied, too complex, relying on, government assistance, relying on too many risk factors. And the precious metals really don't have that. And that's what makes them unique. And I think makes it indispensable that it needs to be a reasonable part of your portfolio, at least enough so that if it gets called upon, for them to step up as your rest of what you have is underperforming or going down, that at least is a position that is meaningful enough to help you.
That's a good point. And the way I look at it, and this is me, I'm not giving individual investment advice here. I'm not qualified. I can tell you what I believe in and what I do myself. Right. Always, I look at 10% gold. Maybe a little bit of that number is junk silver for divisibility, but primarily gold for wealth insurance. I buy it, I hold it, I never get rid of it unless I have a financial crisis, because its job is to be a store of purchasing power in a liquid form for a potential financial crisis you hope to never have. And if you never have it, pass it on to your heirs, give them a start in life. We're going to talk about that a little bit later. Two, there are times, like I said, where you can profit from precious metals coming off the lows because the clouds are aligned, the stars are aligned, whatever the case. And I think that's a time right now. At those times, I look to add another 10 to 15% of my investable assets into precious metals, okay? But even at my most bullish for precious metals, I'm looking at 25%. Okay, I'm most bullish because I do believe in the three-legged stool, and that's something ASI has talked about for years. The best way to protect your assets in good times, bad times, or otherwise is to make sure that you don't have all of your assets in any one country, don't have all your assets in any one currency, don't have all your assets in any one investment or asset class. Okay, and if you can spread it around, and the more you have, the more you spread it around geographically, asset class, currency, etc. That's where I think you get true asset protection. It doesn't come from a shell company in Nevis. It comes from the way you allocate your assets. The difference with that 10 to 15% for profit is I rebalance that. Unlike my wealth insurance that I buy and hold and never sell unless I need it, the for profit, if I double my money, I sell half of it when I rebalance my portfolio, and that's just the way I deal with that. Any other thoughts on that going forward, or should we jump into a little bit of some retirement stuff? Because I want to get back to the pension problem you mentioned, because that's a big
Sure.
one.
No, I mean, I'll just, we're not wealth managers.
Yeah.
I always just say people need to make their own decision, what's right for them. We talk about the merits or the unique aspects of precious metals and what their function is in a portfolio, but it's up to the client to, of course, allocate as they see fit. So, we don't take a position on percentages or anything, right? But, the numbers you shared are, relatively, safe, acceptable, and, reasonable, to stay within norms and not going too far out on the risk curve in any one asset. So, you covered it well.
All right. Kind of shifting gears, talking a little bit about retirement. I know a lot of our clientele, I assume a lot of your clientele, the demographics dictate that this is the world that a lot of us are in. I mean, we've been servicing clients since 1982. Safe to say some of them are in the retirement mode or planning on it at this point. And, that's a big concern to have a pension fund that can't keep up. I mean, let's face it. What's the real return on a term deposit this day and age? You're losing money. Right? So if you put money in the bank, even if they're not negative interest rates, they could be positive, but even with a mild amount of inflation and virtually no interest being paid, anything you set aside for the future is losing money. So putting the money in the bank, putting the money in some sort of treasury or what have you is basically losing money for the future, guaranteeing you'll have less. How can a pension plan that is mandated to make 7-8% or whatever it is in order to continue to keep the promises they made many years ago when people put the money in, they put the money in for people. How are they supposed to make that kind of a return and yet not put the money at risk in this type of environment? It's just not possible, is it?
Yeah, I mean, the pension crisis, which is what it is, and is far worse than most people realize, right? Not only are they not able to really get the returns through the types of investments they traditionally should be in for safety, which are bonds and fixed income, a lot of them haven't even been making the contributions, right, to even invest the money. So, I mean, there's I would call it real malfeasance. That's just my opinion. The states that don't put the money in, and then the money that does go in, there's no way without going out and getting into highly risky and speculative things that they can get an 8% return. So it is this again, like it goes back to what I said before, it's this domino effect. All this counterparty risk, which I know it sounds redundant, but this is so key. There's no counterparty risk when you own the physical metals. Everything else has got massive amounts of counterparty risk. You own a bond. Well, who's paying that bond, right? I mean, it's like real estate. I mean, people say we're going into times where hard assets are a must. And people always say real estate is a hard asset. It is. And it has done tremendous for people. But we're coming into a time that you really have to question how much risk is there in real estate, right? Things like commercial real estate, we all know are the problems, right? Between people working more and more out of home offices, and whether you want to blame Amazon or online, shopping, whatever, we know commercial real estate is imploding, right? Most people can go and see a strip mall here and there completely empty, and that's commonplace. Malls are going out of business. There was two flagship malls in the whole country, if people know. One was in Beverly Hills and the other's in Short Hills, New Jersey. Okay, those are the best performing malls, right? There's thousands of malls in this country, and I'm originally from New Jersey, and I lived close to the Short Hills Mall, so I know it is very high end, surrounded by unbelievable wealth. For the first time ever, the Short Hills Mall, because of the retail economy, can't raise rents. First time. Their customers can't take it. It's almost like if you raise the rent, we'll just close. And if you go in there, there's never lines of people at the checkout. You know, they look at the clothes, they mill around, they get something to eat, and half of them go home and buy it online.
The only place busy at the mall these days is the food court.
Yeah.
I'm from Jersey as well, as you know, and I grew up near the Willowbrook Mall in Wayne. And the
Yeah.
only time I get to see that mentioned anymore is on Impractical Jokers. Apparently, they go pull all their stunts at the Willowbrook Mall.
So commercial is commercial, and then there's residential, and residential is of course a different animal, but you really got to watch where you are. And also, if we do go into an economic tailspin, you know, the big concern is going to be is your renter going to be able to pay, or will they pay? And also, the other scary thing about, to me, real estate, when things get really bad, like states like New Jersey, Illinois, California, New York, with out of control financial problems, they're always going to dump on the thing that can't move, right? That's real estate. New Jersey's constantly raising the taxes as a way to bail a poorly managed state out. And that's not going to change. And you look at what's happening, right? The flow of people that are leaving New York and New Jersey.
With their pocketbooks and their feet. Yeah.
Yes. Have you looked at the high-end market in Manhattan? There are over 3,000 condos unsold that have been built that all sell for like 2-3 million plus. The inventory is outrageous. The market is imploding. Now, it doesn't make front page news because that's an industry they don't like to tout is in trouble. But you know, this is where all the big money was in Manhattan, and it is imploding. So I think my point is, real estate is 90% of the time is a great investment. I would be personally, except for very selective markets where there's an influx of people and there's some real rationale that the supply demand is on the renters, the landlord side. You know, I think you need to be really careful going into that hard asset.
I agree. You were talking earlier about the pension funds, and that's why I kind of led into this segment with that. And I'm going to sound like just the meanest person on earth with like a heart cold as stone. But, you know, the bottom line is, I think there's another place where we just need to get real and take the bitter pill. You know, I think, you know, the financial crisis 2008, 2009 would have been over already if we just swallowed our damn medicine. We would have been healthy, not treating the symptoms for a decade, okay, and still being sick. And I think that's what's going to happen with pensions, or needs to happen with pensions. I don't know that it'll happen. You know, politicians want the preferred, the easiest, the best, in, you know, quotes, solution to where the public is not riled up. Okay, so they don't like deflationary environments. They don't like corrections. They don't like failures. They want to bail everybody out as best they could, and they would rather take the medicine of inflation, which basically insidiously lowers the purchasing power of the currency for everyone, and everyone participates in, you know, absorbing, if you will, someone else's failures. Okay, I don't like that system. I think if you do well, you should succeed, and you should help others along. And the more you want to succeed, the more people you help. Period. And if you do badly, you should fail. And if pensions were set up on poor premises, or they were poorly managed, they did not meet their goals, then they should come clean and they should say so. And we should fix that. And the way you fix that is you change the terms. You know, if a company can no longer do business and meet its obligations, they go into bankruptcy court, Chapter 11, whatever they do, and they renegotiate everything, right? They say, listen, I know you want to get blood out of a stone, you can't. We're going to have to do things a little differently. Can you take 40 cents on a dollar? You know, and I think that's what you have to do with pension plans. I think that's what you have to do with Social Security. Now, nobody wants to hear that. They've been paying into it for years. They want everything that they were promised, right? But it's just not possible. So you have to come up with a different solution. And, you know, everybody takes a haircut. And maybe what happens is the people closest to retirement get it all. People a little bit further away get most of it. People a little bit further away get even less than that. But somehow, some way, that's got to be renegotiated, if you will, because it's not going to work. In the meantime, because I have like zero faith in politicians doing that, you have to take matters into your own hands, and like I said earlier, become simple.
So I would say that it would be nice if everyone would say, all right, we need to restructure. But I think the path that we'll go down is exactly what the politicians. It is easier to print the money at the federal level, distribute it, and have the anger of the people who feel like, wow, I don't have a pension, no one's bailing me out, would not be as much as the organized anger of the state pensioners who would be asked to take a haircut. So I think we will go the route where, and this is, I think, the position of a number of people, they'll start printing up or they'll start bailing out to the tune of trillions, and it'll just devalue the dollar. And at the end of the day, what's going to happen is the politicians will say, hey, we kept your pension whole, right? Your pension said you were supposed to get whatever, $2,000 a month or whatever, and they'll get $2,000 a month, but it won't have $2,000 worth of purchasing power.
You get a pack of gum with that.
It's basically the same thing that happened in the Soviet Union when it fell, right? They got their pensions, but just the ruble didn't buy anything. So that's what we'll do, because that's the way the politicians, and it's easier to do that. And then they'll blame something else for the inflation, right? They're not going to come back and say, well, the reason is we just keep printing this out to bail out everyone. We bailed out the banks, we bailed out this. Now we're going to bail out California and Illinois and New Jersey and New York and who else? And, you know, and most people won't put two and two together. They'll think there's some other bogeyman that's responsible for inflation, right? And so that's, in my opinion, probably the path we'll go now, as opposed to them fighting and suing each other in court and everyone suing each other who's responsible to pay.
Gotcha. The other point I wanted to hit on here tonight, and I think we've talked a little bit about this offline, Chris, but I think it's probably one of the most important things we as a company are talking about with our clients this year and probably going forward, and that's estate planning. And I'm not a asset protection or estate planning attorney. Don't get me wrong, but I will tell you that I think estate planning and the specific considerations that need to be given to precious metals are lost on a lot of people. You know, you go open up an IRA, for instance. Anybody that's a trustee administrator, one of the first things you're going to do as part of the package is you're going to identify a beneficiary, maybe a second or third, and give them all the contact information. So if anything, God forbid, happens to you, they know how to get the funds to the heirs. Okay, and most financial relationships are structured that way. Am I correct? I mean, this is the world you came from.
Mm-hmm. Yes.
Where is that in precious metals for the most part? You know, when you go to the precious metals dealer and you buy your 20 gold eagles, or you go to Chris and you buy your PMC ounce, and you may be different. Do you have some beneficiary clauses built into your forms or no?
No, we go based on what the estate says, because we're not financial institutions, right?
Exactly. So
we're an animal.
Yeah, so that's what you'll find in the precious metal space is that, you know, you're with the institution that's selling the metals to you. You're not having anything on file. In many cases, you take delivery, right? Or you put it in a depository somewhere. And, you know, the people that sold it to you, don't necessarily know if you even have it anymore in many cases. And because of the nature of the beast, where a low profile is part of your security plan for your precious metals, you would be surprised how many heirs have no clue that precious metals even exist in the portfolio. And I raise it because we found this out a lot last year. We just reached out to clients that we hadn't heard from in a number of years, trying to figure out, what they wanted to do, if they had a plan, where they were in life, et cetera. And we got a lot of no answers, return mail and things of this nature. We started digging, and in some cases, we found obituaries, et cetera. We reached out to next of kin, heirs, and a lot of the times estates had been completely closed. Basically, they had distributed all the assets they were aware of, and the estates were closed, and they had no idea that they had $500,000 in gold at the Perth Mint in Australia. We had one client at the end of last year. Brian, our sales manager, reached out, found the wife when we couldn't reach the husband, and said, by the way, did you know that you had these assets? And she had no idea. Husbands, talk to your wives. Wives, talk to your husbands. Please let each other know what the heck's going on. But she had no idea. And when Brian called, he said, by the way, you got $300,000 worth of metals at Perth Mint. And, she thought he was a savior. She said, it's the best Christmas present I ever had. I have all these medical bills mounting. I had no idea how I was going to pay for them. What do you do to be able to identify that you have these assets, while keeping a low profile? Part of your security plan, again. You don't go out bragging, I just bought a bunch of gold. You keep it quiet. In some cases, you're looked at as the crazy person in the family that believes in gold, right? So you don't even want to talk about it for fear of them putting you in an asylum. So how do you communicate that to the next generation so that asset is not dead? Any thoughts?
Well, most people, I think, if they're organized, and I can only, talk about like my experience with my father and such, will have, certain people in the family who need to know that at the time of passing, they'll have a box, a safe deposit box or something that the other people have access to, and they'll have documents in there. And, so as a precious metals holder, if it's either you can have the physical metals in there, if it's in a depository, just have a copy of your account opening form and, one of your invoices from the depository, so that they know who to go back and who to contact. So I guess it would just be put in with other quote unquote important papers. No different than an insurance policy, right? I mean, an insurance policy is just a piece of paper, and unless you know that piece of paper exists, they don't know when the individual passes away. You have to go to them and make your claim. So I just think the person, it's incumbent upon them to put within their important documents that they do have this asset. And when you talk about beneficiaries, like why don't precious metals dealers have that? They're not financial institutions. I mean, at the end of the day, precious metals from the law is viewed as an object, right? It's different than a mutual fund or a stock, right? So in some respects, it's like an antique. It's an object. It's a physical object that the person had as part of their estate, and that's basically how it gets handled.
I thought that was a great analogy, by the way, where you mentioned the insurance policies being the same, because let's face it, that's what this is. This is an insurance policy. And it's not surprising that entire industry is dealt with the same way. You don't know about it unless you pass on the information. So, we're taking an active role just because of some of these cases we've run into last year where, just people had no clue. And we're trying to reach out, trying to make sure that, you got to have somebody you trust in this world, or even if you don't tell them exactly what it is, you got to let them know where to find it, when and if,
Yeah, and that was my point, right? Where you say people that are important in your life who you want to be aware of because they're going to be the recipients of your estate. You add it to the papers, you make it clear in there what it is. so that they have contact information. You know, if it's through a dealer like ASI, if it's stored, even if it's not stored, like say that they have the gold in their possession, since most people have no experience in precious metals, they don't even know how to dispose of them or liquidate them or value them, right? So I think it's important that even if the metal isn't stored through that dealer, that you give them contact information to a dealer that can help explain, gee, what are these sleeves of these Krugerrands? You know, what are they worth? How do I, you know, what can I do with them? So
Good point. And I encourage anybody who's struggling with how to do that, maybe some of the techniques, et cetera. Again, we've been doing this for a long time. I'm not a manager, planner, estate attorney, what have you, but you know, we've dealt with a lot of these issues over the years. We can give you some ideas and you can figure out what's best for you. You can bounce it off your trusted legal counsel, and you know, see what the best solution is. But by God, talk about it, figure out what to do so your heirs don't, you know, move on with their lives after you pass and not have any idea what you did for them. You know, part of that is the gift that keeps on giving, crosses generational boundaries. We're kind of at the juncture here where I'd like to transition, if it's okay, Chris. We'll have some
sure.
parting thoughts at the end, but I want to transition to some questions. And we, like I said, we had a few that were sent in already. I see some building up here as well. So I'll read the first one. This was sent in while we were talking. Hi, Palladium had a good ride. Now, what's about silver? And I don't know, you want to take the first shot at that? I'd like to add to that, Chris, because it's something I wanted to get to. We didn't quite get there, is just as you're answering that, and I have some thoughts too, what do you think will be the best performing of the four precious metals this year? They all had a good ride last year.
Yeah. Just say your question again. You actually broke up a little.
So the listener's question was, Palladium's had a good ride.
Yep.
What about silver? And so we want to answer that, but I want to extend it to, what do you think is the best potential out of the four metals?
Okay. So, first on a high level, all four of the precious metals, they don't move in lockstep, but the trend is favorable for all of them, including silver. Palladium is a unique animal, and it's unique because of a couple highlights. And what I think is, what's the beauty about Palladium is, if you saw that, and its rise has been more than just a little bit good. I mean, you're talking about over the last 6 years going from like $450 an ounce to $2,300. Because what you're seeing in Palladium is free market. This is what's the difference between Palladium and some other metals. Silver is used in industry just like Palladium. But Palladium is basically comes out of two locations, South Africa and Russia.
Very stable.
South Africa is an economic basket case, right? Their output is being curtailed because their infrastructure, their power grid is kind of imploding from lack of maintenance over the last 20 years. And they have rolling blackouts, which basically close the mines. That's just one of their problems. So the output from South Africa is sketchy. Russia's Russia. Even what comes out of the mines in Russia is not enough, or even Russia and South Africa and the little bit of palladium that comes out of Canada is not enough to meet the demand for the auto industry, which is predominantly where palladium is used. And so they've been burning above ground inventories. Now, so what you're seeing in palladium is, if you're an automobile manufacturer, and even with a slowing economy, they're still making cars, right? You put about $170 of palladium at current price in each car. They are bidding up to make sure they have palladium, right? They can't use a futures contract, right? This isn't the way Wall Street, when their investors say, maybe I should be in gold, they put them in some derivative where no gold is really owned and the person feels good. When you have
Palladium doesn't have the same impact on a catalytic converter?
Platinum? So
no, paper palladium.
Oh, yeah. Here's
not the same impact.
That's the beauty. So this is what I mean, that you're actually seeing free market, where the automobile manufacturer's like, I don't want a derivative. I don't need it. I need the actual metal. So the price is getting bid up, and you have the geopolitical dynamics, very scarce, coming out of unstable regions. So, but with silver, there's a little bit more of a comfort, right? Even though it's used in industry, silver is still mined in Canada, the US, Mexico, all these other friendly territories. So there isn't that concern that your supply can get turned off overnight, right? You can't, when you're counting on Russia as your supply, right? You can't risk it. So just think about it. You got this big assembly line. Imagine shutting down because you can't get palladium. And if someone thinks the answer will be, well, they just won't use catalytic converters, good luck. Half the country, half the world thinks, are very strident about the economy, I mean, the environment. They're not, you're going to put catalytic converters on. They'll stop making cars. So the point is, palladium is in this very sweet spot. And I'm hoping what you've seen in palladium when the free market finally kicks in is what you're eventually going to see in silver and gold when the free market says, you know what, because of the state of fiat currencies and debt, derivatives don't cut it anymore. I need the physical. So I think this foreshadows what you're going to see happen over the next several years down the road, a couple of years down the road in silver and gold. Platinum's a different animal because it's like palladium, and I won't go into that story, but platinum will move along, and it has been perking up. It really was an underperformer for a number of years, but over the last year and a half, it has picked up and is finding its footing and a little traction too.
Gotcha. And the numbers from last year, correct me if I'm wrong, they're going to be close enough. I want to say gold was up probably about 17, 18%. I think silver was up 15% on the year, platinum 21%, and palladium 50%. 50
Yes.
plus, and that just carries on what's been going on. Elaine was asking specifically about silver and what do we see going forward. I think the only issue that silver really, I think it's a positive for silver from the supply side of things is there's so few pure silver mines. Okay. Basically, silver is produced mainly as a byproduct of mining something else, right? So you tend to see it be flush, if you will, when the economy is going well and there's a lot of industrial demand for other things. Then they'll pick up some silver as they're mining those other things. But you can't just flip the switch and say, we need more silver, let's go mine some. You need all the other stuff that gets mined to generate some silver. So it's very inelastic in terms of the supply. I think silver is set up well, even though all the metals did well last year. I actually think there's a chance that silver might be the outperformer this year. Maybe not against palladium because that story is just not going anywhere. There's really no solution right now. But I do think it can outperform gold this year. Regardless of the economy. Regardless of the economy, if the economy is good, then there will be industrial demand and silver should benefit, okay? If the economy is poor this coming year, which is probably doubtful in an election year, but you never know. If the economy is poor, then I see it being bought for safe haven flows, just like gold. So I think silver is going to be able to do well regardless of it.
So I think my feeling is silver is being dragged down because of all the talk about the global slowdown in the economy. Again, because of the other circumstances with palladium, it gets a buy, right? So it's got other issues that silver doesn't have. I think silver may do okay this year, but there's a good chance it may get through this year and gold will do better. I still think over the next 3 to 5 years, silver will do very well. I don't think it will I don't think it'll have a poor year, but I think it actually still into 2020, gold may outperform it. So you know how my position is that you can't time metals, and trying to time, or I see some people, and I don't subscribe to this, where they want to go all in on a single metal because they think that's going to outperform the others, and they're taking this kind of a gambling mentality. I just think that a diversified position is what you need to be in, and that's no different for the precious metals. I mean, it works in stocks. You don't go all in on one stock, no matter how great the story sounds. And to me personally, I've always felt that way about the precious metals.
Well, Chris, it's one of the things that attracted us to you and your product. It's exactly what it does. It brings instant diversification to your portfolio with the PMC ounce. You don't have to know what's going to outperform what next year. We know the environment is conducive to precious metals, and honestly, I think that argument's there all the time. Owning a diversified, proprietary mix of those metals in a very easy way is going to be one of my recommendations. I do encourage everyone to stick through these questions. Some of them are incredible in terms of the points they're going to allow us to deal with for everyone's benefit here tonight. I'm going to go into one of those here in a second. But two, we have some offers to make only to those that are listening here tonight that I think is worthwhile. So I'm going to make a couple recommendations. I can tell you PMC ounce is going to be one of them, especially in this environment. Another question we had was from a client. I don't know if everybody's familiar with the story of Charles DuPont. He basically got an inheritance of $1 million or 1 million francs, converted them into 50,000 French gold pieces, and basically cashed one in a day for the rest of his life to cover his living expenses, etc. When all said and done, and he passed away at a very, very advanced age, he had barely used not quite half of it. And he basically went all in on gold. Okay, it served him very well, and he left behind a fantastic inheritance. At the time, I think it was priced at about $9.3 million or something like that to his son, nephew, somebody, I'm not sure, somebody who survived him. So I hear a lot of this, and we know some people right now in this current environment that are doing this. They're going all in gold. This will come up every time there's a gold bull market. At the start, especially toward the end, I want to put everything in gold. Gold is the way to move, or silver, maybe palladium now. What are your thoughts on doing that? I mean, we know that gold stores its purchasing power. We know as long as it's measured in fiat and politicians control the fiat, that gold is going to go up as measured in fiat over time. And you should still be able to purchase the same number of goods and services if you start to outlast you. What are your thoughts about all in gold or silver?
Well,
or PMC ounces?
I've been in this for close to 2 decades, right? The company is 17 years old now, 18 years old. And I am completely comfortable in the metals. And I've been through ups and downs, but I've never panicked. I never felt my position was going to go to zero or to go down where I lose most everything and never come back. I've never felt that way. I have clients. I have a couple clients, and one we have a really good relationship, and we've been talking for years. And he says the same thing. He's just like, I go to bed at night. I'm completely comfortable. He has a substantial precious metals position. He's like, I'm comfortable. I know they're always going to be there, or they're always going to have value. I know they go up and down in price. He goes, I'm more concerned about my stock purchase plan at work, where I buy the company's stock. That I'm more concerned about. So, that story is true. I actually have heard about people who lived like that. I knew of a doctor that had bought precious metals many, many years ago, gold coins, and he would periodically take them out, sell them off, and, buy things, go out with his wife, and, I personally, and because I don't want anyone to misconstrue, right? We talked about asset allocation percentages, and we're not, that's why I say everyone has to make their own decision.
Of course.
But, I think when you really get to understand the history of precious metals, and you've been in it a while, and you've watched the ups and downs, and you watch when gold went down to $10.50 an ounce, number of years ago, and certain people thought it was all over, and there's certain guys out there were saying how it was going to $200 an ounce or $250. Won't drop any names. They basically does it to sell letters to get everyone all excited, And here we are, 1,500, climbing nicely. I'm comfortable with it, and again, I know it's redundant. I said it before, but I think we should all follow this. Hopefully, the folks on the call will. and especially look at a chart of gold going up to the 2008 financial crisis and realize in 2006 and 7 and 5, 6, 7, when everyone was talking about how phenomenal the economy was, just buy homes, refinance. They were doing mortgages at 105% of loan to value because you couldn't lose. And why was gold going up when it made no sense, right? You have to store gold; it doesn't give a yield. Remember all the ridiculous things people. You can't eat gold. I love that one. I mean, you've heard that, right?
Of course.
Well, I feel like saying to them, "What do you eat your stocks?" I mean, it's such a ridiculous thing to say, right? I mean, that's just a sign of when someone is so conditioned to be anti something, they can't even think logically. You can't eat gold. I mean, so my point is.
Go ahead.
No, so I'm comfortable with it. And I think, again, it's telling us, it's giving everyone a signal. Trouble ahead. I'm rallying because there's trouble ahead. And then this is rallying even though you're getting phenomenal returns in the stock market. So liquidity driven.
To read that as big trouble ahead. I think part of it, I don't blame the mentality or the psyche. I think it's just brainwashing over the years. Let's face it. I think you know this. I think everybody knows it if they think about it for a second. The advertising dollars are being put into this, that, and the other by banks and brokerages. Okay. So their message is what's getting out. It's not getting out there from the mines in South Africa, not to the same extent by a long shot. So their message is what perpetuates the economy. And, I never saw this more clearly than recently. I was at a conference, and it was mainly stock folks, folks that are comfortable in the equities, but not comfortable at all with precious metals. And I was the gold guy, right? So I had a few people walk by. A bunch of them were into gold. Some of them were interested and asking good questions. Others just kind of looked by and said, "Oh, you're the gold guy," and then they just want to keep moving on. And I'm not just one to let things rest. I want to know what people are thinking, right? So I started stopping them, and I said, "So I appreciate that. Not for you." They would tell me, and I'm like, "Can I just ask why it's not for you?" Because I tend to think it's for everybody. And they would share with me, and this one guy came up and he said, "Well, I love stocks. I love dividends. Gold doesn't pay any dividends." Okay, got it. So dividends is what you're after, and I assume the bigger the dividend, the better. You want to make a profit. That's why you're interested in dividends, right? He goes, "Absolutely." I said, "Okay. Were you aware that from 2001 to 2011, gold went up 650%, 5% a year? Were you aware that silver went up 1,000%? Okay, 100%. He goes, "No, I wasn't aware of that." I said, "Just by chance, are your dividends generating that kind of a return for you?" And he goes, "No." And I said, "Well, maybe you should consider some other things and get a little, variety in your portfolio." He goes, "I like dividends." And that's it. And he stormed off. Because it's ingrained that gold can't turn a profit. But you know what? It can. It's just at times. It's not what I believe you buy it in the first place for, but it can generate a return. Getting back to the client's question about, should you go all in gold? I'm not one to go all in anything. I'm comfortable and I'm passionate about precious metals, but I don't go all in anything, except my family and my business. But I think everybody's situation is a little different. I think we've hit on that as well. If you're at a stage where you have accumulated everything you need in terms of purchasing power to last you till you pass away and beyond, wonderful. Maybe you should consider putting it all in gold. Okay, because I don't think there's anything out there that can preserve purchasing power as well. But what if you haven't made that kind of money yet? What if you don't have all the assets you need to make it to the finish line, so to speak? You're in a different place. Okay, so I think, again, everybody's role is different. Everybody's situation is different. And I won't rule anything out as the answer for any one individual, but it's not for me, but I could see the value in it.
Well, I think if you had to go in all in only one metal, it would be gold over silver, right?
Lo- Less volatile, longer
That
track
is the
record.
one you would
Yeah,
go in if it's just going to stick to one.
yeah.
Um, and silver is going to be the laggard because, I mean, one thing people, I mean, I guess most people know this, right? And they hear about, central bank buying and all that. Central banks don't buy silver, right? I mean, that is, so that's why it's always going to lag gold. And it's not at the official level, silver. So, but it will eventually, get its footing. It's going to trail and up gold. And it's a very volatile metal, and that's in both directions, to the down and the up. And on the big bulls moves, it will tend to outperform gold. It's in some respects you can say it's where are we going to be 5, 6 years from now, right? I think these metals will all be up. It'll be a matter of degree, right? One thing about a diversified position, you balance everything out, and the whole reason for diversification is that that ride becomes a little smoother as opposed to going all in on one metal and then having the spikes. Because if you look at right now, year to date, gold is up, silver's down.
Yep.
Right? So, if you had a little of each, it'd be balanced. If you went all silver, you'd be down and you would be more disappointed. If you're all gold, you're up. But that just happens to be for now. So if you have enough resources, and as you mentioned before, you were kind enough to talk about the PMC ounce. It is a productized way to have actual physical LBMA bullion vaulted in the client's name, and you get this instantly diversified position. And you don't have to, if you kind of build those positions on your own, it generally makes sense only if you have $100,000+, right? But this works for people with much, much more modest positions. And the PMC ounce is designed, it's logically weighted and balanced. It's a position in all four metals. Some people, mistakenly say, well, should I buy gold too? Well, gold is in it, right? It is. It's real gold. It's LBMA bars. That's what's backing it up. But that diversified position is designed to give a better risk-adjusted return, which is just a way of saying risk-adjusted return, lower volatility, but you're capturing the moves in all the metal. And that's what the product does. And I just have to say, been around since 2008. And just to put it in perspective, as of yesterday's close, it's up 138% from basically January 1, 2009. And just to put that in perspective, that 138% for the PMC ounces versus 85% versus gold. So that's a difference of 53 percentage points higher in the PMC ounces favor. And silver, as of yesterday, was up 68%. So you're talking about, like a 60% superior return versus silver. And that's by and that's a conservative position because it's diversified, right? That's a certain analyst out there who's well known, and I won't use his name, that's the best thing you can get when you're going for a diversified position to smooth out, and you're beating the two main metals that most people are in. So you're getting this, it delivered a very good return without taking the risk of saying, I'm going all in one, and you just happen to get lucky and time the market right, which market timing is honestly, it's all luck. You can't market time.
Gotcha. I'll just add to that there's one other question from Robert, kind of related. I think we've already covered it. If I haven't, let me know, Robert, and we'll go back and address it. But basically, what did we think? Where do we think gold was going? I think we've covered that ad infinitum for this year and going forward. These bull markets tend to last about 10 years. So I think for the next decade, you're pretty safe owning any of these metals, but specifically gold. I will add one thing, though. If you are in that position where you have everything you need in terms of purchasing power accumulated for the rest of your life, and you want to make that transition to gold or PMC ounces, Chris and I stand ready to assist you. You just need to give us a call. And you want to call someone like us. Chris, like ASI, will buy back whatever they sell you. Okay, and firms that do that because they're not embarrassed about the exorbitant prices they're charging you when you buy it from them in the first place. If a firm doesn't buy back from you, buyer beware. My rule is when I'm looking to buy something, I ask first, when I'm ready, will you buy it back? If the answer is no, I will never buy from them, because they either don't value what they're selling and they should just give it to me, which is probably not the case, or they're embarrassed about the margins they're charging because they're taking advantage of you. Firms like Chris's, firms like ASI, we charge a reasonable price in, we charge a reasonable price out. We're not embarrassed about anything. We can help you in both directions. So if you're in that position, you're ready to buy your gold to last you the rest of your life, or your PMC ounces, we stand ready to serve.
And Rich, I just want to add to that, because what you said is so important. Everyone just thinks about the first part of the equation, the acquisition. And a lot of thought isn't given into, okay, liquidation, disposal, getting back to cash. And that is so critical. Something happened in our firm just this last week. We have a client who owns the PMC ounce. She became a client about 6 months ago. About a year ago, she didn't know us at that time. She had bought $100,000 in miscellaneous gold and silver from a dealer. Now, a lot of the items, and I'm not going to go into what they were, are not the most appropriate, if you know what I mean.
Absolutely understand. I'm going to talk about that in a little bit.
So this is the double-edged sword. This is how bad it is. When she called and she said, you know what, I want to liquidate that position. I want my money. They quoted her a 50 cents on the dollar for what she put
Typical.
in. Now this is a year later when gold is up 18%, right?
Typical.
Put in 100 grand, quoted her, to be honest, it was $52,000, a little over 50%, but it even gets worse than this. You know what they told her? We can only buy back $5,000 every 2 weeks. They wouldn't take even the whole position. They could. Now,
that didn't set off any red flags at all for you, did it?
Right? Do we have a little bit of a cash flow problem? Now, ASI would never have an issue like that, right?
Not at all.
You're connected. You have all the relationships. You're able to handle these trades, and that's important for people to realize, because there's going to come a time where you're going to want to cash out. Maybe gold is up at $2,800 an ounce, and you really feel like, you know what, I want to take some money off the table, right? You want a dealer who's going to be able to step up and execute that trade that day when you need it done. So that's really important. And again, a firm like yours, this is why we have a relationship with someone like ASI. You go back to the 1980s, you have been around for 40 years, close to 40 years, right? And have been through every market and has always stepped up, right, and done the right thing. And that is really important. So I think the due diligence, just as important as picking which metal, should I be in gold and should be silver, I actually think even more important than that is the right dealer. Because when you talk with the right dealer, he'll also give you the best, answer your questions in the best way to help make that decision. Which metal should I be in? How much should I be in?
Absolutely.
I think that's step one.
I appreciate you saying that, Chris. Obviously, we're aligned philosophically, ethically, morally, etc. So Chris is exactly the same way. That's why we work with people like Chris. The story you just told, I knew as soon as you started telling it where it was going. Unfortunately, it's typical.
How many times have you heard that?
Chris, it's typical, it's common, and it's as sad as it is typical and common. And when you find a good dealer, hold on to them. When you have a question, I don't begrudge somebody buying from somebody else. If they've got a good deal and I can't beat it, I'm like, go ahead and do it. That's what our salespeople will tell you. If we can't beat the deal, we're always in the market. We're always competitive. We may not always be the best price, but I promise you, we will always have your best interests in mind, because we don't want a trade. We want a long-term relationship. And the firms that do that are around a long time. Proof positive, Chris, proof positive, ASI. There's another question that came out, said, what impact, apparently there's an impeachment going on. What impact would a prolonged impeachment process have on the economy? And then there's a caveat, what if it's resolved quickly? Any thoughts there? Does it even matter?
So I don't think it can be prolonged that much longer, right? At some point, I think it's got to wrap up. And if it doesn't, I think we're just going to have what we have now, this grinding on. I think the economic, what's going to impact the economy are some other factors. I don't think this whole thing with the coronavirus, it could be a problem, right?
I read something today. It's already surpassed SARS in
Yeah.
terms of
I
the
mean,
number of incidents.
of course, China is famous for their lack of candor, right? They like to claim that they're forthcoming, but, they do not have a good track record. And the track record, of course, always errs on them trying to downplay and minimize a situation. Um, this could have an impact. I mean, they're talking about the hurt to the airlines, right? The drop in flights is material, and you realize how companies are really, there isn't a lot of wiggle room to lose capacity, right? So American Airlines cutting these flights to Beijing and all that. With all the flights they do, you realize you take out a major lane like that, it really hurts them. So I think the politics behind the impeachment is another animal. I think on the shorter term, the coronavirus, if over the next 2-3 weeks, if we watch this, if it does seem to be really spiking up, I think you're going to see it could be a real drag on the global economy. And that's something that's more short term. Because I think if they throw it out and the Senate just says, nope, not going to happen. I don't think you're going to see big change. You might get a little spike in the stock market. The stock market is so bid up. Again, we talked about fundamental, right? Logically, it should go up, but the stock market goes up for every reason, right? Good news, bad news. It all has to do with the liquidity injections. But I would actually be more concerned keeping my eye on the coronavirus.
Yeah, I tend to agree. I think it's already impacting markets. The coronavirus is, whether it be a little bit of a spike in metals or a little bit of a pullback in the stock market on the news breaking. So it's already having an impact, and we really don't even know what the beast is, so to speak. In terms of the impeachment, regardless of how it gets resolved, I don't know that it's going to have a big impact. Our issue is much, much bigger than this impeachment. Proceedings. We have a dysfunctional government. You hit on it earlier. They're not talking to each other. They're entrenched. It seems like they're getting further and further apart, and they won't compromise. Pretty much, I don't know how to get 380 million people on the same page on anything, let alone every single issue that affects us. So, compromise is important in a society like ours, and it seems like our politicians don't know how to do it, don't want to do it, flat out refuse to do it. And that's a problem. They're not getting anything meaningful done.
It's funny. I'm going down a rat hole, so forgive me, right?
Yeah.
And this is getting maybe
Year of the rat. Feel free.
a little on the philosophical side. But even the whole idea of compromise. Sometimes the problem with the term compromise is that means there isn't a right thing to do and a wrong thing to do. You just kind of like, let's come up with a deal. And I think a lot of times there's been too much compromise, right? We haven't done what's just right for doing it for the right reason. It was to make too many people happy. Like, everyone can, like we're going to bring everyone to the table. So even though this isn't the best interest for the country, we're going to give it to them because we want to make them happy. I think part of our problem is, 5 decades of compromise and not just saying, no, this is the right thing to do. I think politically, I think we're all polarized. Everyone knows it. I don't think the impeachment is going to have that big an impact on it.
I don't think it's going to change anybody's mind that's not already made up.
Yeah, exactly. Whether it gets impeached and removed from office.
He is impeached. Whether he gets removed,
not going to get removed from office. So whether he gets impeached, because Bill Clinton did get removed from office and he was impeached, it's not going to change anyone's mind. I think the bigger thing about the economy is who will be
who steps in
for the other side, and are we going to go hard socialist or not? That is a bigger risk to the economy because everything with Trump and the current is all baked in. Everyone's got their opinions. No one's going to change what they think economically because they've already made their decision and they're making their decisions based on their feelings toward him and what they think he's going to do with the economy. I think the thing is, okay, who's going to be the standard bearer for the other side?
Yep.
And then what's the probability of winning? That's going to be more of a...
So 2 thoughts from my end on one, and then you kind of touched on another question I have here that was sent in ahead of time. So I'll get to that in a second. That's, whether a socialist moves in or, say Trump is reelected. President Trump's reelected. So first part, I have a friend who thinks that we're much, much better off every time that Congress is out of session, because it's not what good they can do, it's the less evil they can do while they're in session. So from that standpoint, I hope they do allow witnesses, because they're going to have, that's going to tie it up in the judiciary for months, God knows years, as they agree on who they can and cannot talk to. It's just going to belabor the point, drag the session on, and none of these people can get out of that chamber and do any harm. So just a thought. Two, you raised a point, and it's funny. I was talking to somebody today, and I shared with them that question was coming. What happens if a socialist is elected? And the first response was, well, it's not socialism, it's the left. And I'm like, no, I don't agree with that. The fear is not the left. I think a lot of the left's ideas are wonderful. Whether you subscribe to them or you're on the right or what have you, taking care of people, is not a bad idea. I think there's a lot of left-leaning policies, et cetera, that are wonderful to find a way to solve, whether it be through government, private, what have you. I do think that it's a different question when somebody asks what happens if a socialist takes over. If a socialist takes over, that's communism, right? That's collectivism. That's centralized government dictating everything for us. And that is diametrically opposed to a capitalist economy that we have in place. I think that's an issue, because basically the entire system that we've operated under for God knows how many years is going to be at conflict with those in charge of it. Your thoughts there?
Yeah. So if someone comes in with a truly collectivist agenda, as opposed to just, right, left thinking, that will throw the economy into a tailspin. Because collectivism means, state taking control of more industries, more companies, and that would throw everything into flux. And that's why I say, or I believe that the outcome of the impeachment isn't going to change the course of the economy. It's going to be who becomes the standard bearer for the other side,
The election.
and what's their chance of winning. Like if you
Chris, can you name one country that has succeeded under communism or socialism, pure communism, socialism?
No, they never have. I mean, post World War II, right? The U.S. has always had a superior economy and higher standard of living than all of Europe, and that's because they were more socialistic, right? They were more focused on, socialistic policies, where we were a little more free market, so we were a more innovative country, right? More innovation came out of the U.S. than Europe. That's not because we were smarter. I mean, the people that made the inventions here were European stock, most of them, right? So it wasn't the people, it was the environment that fostered either innovation and striving to do better, and unfortunately, sometimes it goes overboard and is crass materialism. But in the course of all that, we also lived a very nice, comfortable lifestyle.
Standard of living is better than it ever has been in probably the history of civilization, and I don't think it's an accident. I was driving my daughter to soccer practice. This is several years ago, and we were talking about how America is one of the wealthiest country on the planet, and she said something to the effect of, well, what good is all that wealth when there's people out there suffering and pain, et cetera. And I was like, you're missing the point. You can't help others unless you help yourself first, right? And I subscribe to The Economist. I get that little booklet at the end of the year that has the tables of the status on every financial category you can think of, to include the countries that give the most charitable donations, things of this nature. And, you know, you look at number one on the list year after year, it's the United States. You look at number two, and they're so far in the rearview mirror, it is not even possible to you know, categorize them in the same context, if you will. Have to have capital to do good with capital. And I think America does that more than, or better than probably anybody else in the world. So, you know, there's something to be said for being successful, and it can do with that. Not everybody does the most noble things with it, but tons of people do. Any thoughts there?
No, I agree. And look, the United States has always been wealthy enough to take care of the people who truly are not able to take care of themselves, right? That was, you know, that's something this country had. Now, unfortunately, it becomes abusive by people who abuse the system, and also there were, you know, there are institutions, and there's just a lot of waste and rot, you know. But as far as those who are truly in need, the nation has the wherewithal, always has, to truly take care of. You know, and unfortunately, governments, once they get involved in things, handle these things poorly. They consume a lot of money, and not a lot of the money, we'll call money, translates into the resources that are needed. A lot of it just gets lost through inefficiency and bureaucracy, which is unfortunately the challenge, and unfortunately why countries that go full-blown socialist, full-blown centralized control, you know, have such a poor track record as far as the standard of living.
I agree. And I will tell you that we have other questions, but looking at them, we've already answered them. Okay, so there was a question if you had to put all your money in one investment. I think we've covered that. What could potentially trigger a correction or worse in the market? I think we've already covered that. Let me see, which precious metals do you expect to do the best? We've covered that. Yeah, the only other question is, do we expect the market to continue on a bull run? And I think we've already addressed that. Things aren't always happening normally, like we would judge it from past experience. I can't believe the number of companies that are out there, you know, turning profits, or not turning profits, I take it back, whose share prices are increasing, even though they've never turned a profit, have no plan to, and probably never will.
That's just mind-boggling, and you know, that's just a casino, right? When you take a company like Uber and Lyft, and like they don't make money, and their business model never gets a point where it's not about hitting a certain volume or threshold or economies of scale, a model that you will never make money, and people still are buying into it.
Unbelievable.
You know, this goes back to why nothing, you know, we are such a surreal market right now, because when you come to the point where you don't need to make money to have a bull market in your stock, then you know you're in the twilight zone, and that's where.
Yeah, I just suggest everybody pull up, go to the St. Louis Fed site. They have wonderful charts produced by our own government that basically tells the story of what a horrific job they're doing. Pull up a chart that looks at the monetary expansion, and when you look at what they've injected into the system, it's faster than the acceleration on a Tesla. You know, it's just unbelievable. It just goes from I can deal with this to, oh my God, we're out of control, spinning wildly in the blink of an eye. Take a look at some of those charts. It's really a sad testimony of what's going on with our government managing it.
And on a lighter note, the only good thing I can honestly say, I use Uber all the time. It's great. And I thank the people that pump their money in so that they can give me a ride at a loss.
Amen.
But, you know, it's a great service. It's probably, unfortunately, underpriced because it's not profitable. But for those who are using it, it's a great subsidized service.
Gotcha. So I'll just start off with wrapping up. And I just I think it's clear from the folks that are listening that where we stand on things, this is, like you said, this is the twilight zone. I don't think the world's going to come crashing down around us. I think we'll
No.
figure it out. And, bet on the fact that the governments are going to take the easy way out and, spread that pain across everyone as opposed to taking our bitter medicine and moving on. I'm of the camp that's probably never going to be happy because I would like businesses that stink to go away, and I'd like businesses to rise to the top. I'd like successful people to rise to the top, and folks that make mistakes either move aside or, as the society tends to dictate, learn from those mistakes and become successful contributors to society. Okay, that's what entrepreneurism is. You find a successful entrepreneur, I'll show you somebody who's probably failed at least a few times. So that's okay. It's okay to fail and learn from it and do better. In this environment going forward, I think metals are poised, whether it's wealth insurance or profit, both here. And I mentioned a couple specials for those that kind of stuck it with us and are listening tonight. I think Chris has raised a lot of time to that too. And I hope it's a benefit. The other benefit is I think there's two things you can do right now, tomorrow, Friday, even early next week, to take advantage of the opportunity the market's giving you. I think the dollar's ready to start turning. I think it's got more purchasing power right now than it ought to. You should use that to your advantage. I think your gains in the stock market are worthwhile and can be, that's where you make money. Let's face it, you make money in the stock market, but at some point you're over allocated. I think if you can't find cash, it's there. It's just misallocated right now. Sell some of those profits, take them before they disappear on you, and put them into tangible assets. The two candidates I have for you are one, PMC ounce. Like I said, it is instant diversification. It is reasonably priced. The track record speaks for itself. And I can tell you the person that you're staring at on the screen here is the type of people you deal with, whether you're buying or selling. Second thing I would suggest is just something that we have available to us. I mentioned it to Chris before the show. I've never been a fan, unless you just want it for the beauty as a collector to give it as gifts. I have never been a fan of buying modern issue proof coins. Okay, I think you pay exorbitant premiums. Now, they're nicer coins. They go through extra strikes at the mint for better detail. They're more highly polished. They come with papers of authenticity and a nice presentation box. They're wonderful to look at. But 1 ounce proof gold eagle has no more gold in it than a 1 ounce bullion gold eagle. Premiums are staggering typically. I tend not to buy them because when you sell them back, you get most of that premium evaporates. You get basically melt gold or maybe a little bit of it. Okay, so I'm not a big fan of it for investors unless there was some weird case where the proof gold eagles could be bought at or below bullion investor grade prices, and we actually have some. So I do think that those that are looking to pick up some gold right now might consider that. It's a great way to get added value for the 1 ounce gold eagle you're buying. You could buy it cheaper than backdated gold eagles. Premiums are lower right now by 35 to 45% when we made the offer yesterday to our readers. And our supplier has come in and taken, for those listening tonight, taken another $5 per ounce off any of the prices we stated yesterday. So I think you should snatch them up. They're a limited quantity. PMC ounce, unlimited quantity, but both together could have a real impact on your portfolio. You should take both those steps. Any other thoughts, Chris?
No, you did a great job. Thanks for sharing that. And it was great to get together with you, my friend. And I appreciate everyone who came out to listen to us and hear us. And, ASI is there to help you. A great seller and market maker for the PMC ounce. And we're real proud to have been working with them. We've been doing it for several years now, and it's a great working relationship with a like-minded company who first and foremost, it's about doing the right thing for the client. So again, thanks everyone for coming on board, and hopefully we'll be talking to you in the next several months.
All right. And as I used to do a lot of reading when I was traveling in territory, and I got out of the military doing door-to-door sales in Georgia. And a friend of mine, Keith, turned me on to Zig Ziglar. And I'll never forget, Zig said, you know, the way to get everything you want in life and more is to help more people get everything they want in life and more. That drives Chris, it drives us. It's the way business should be done, in my opinion. And we look forward to working with all of you going forward. We appreciate your time tonight. Wonderful questions, and we can't wait to get back and talk with you next quarter. For now, it's Chris and Rich from On the Move, and thank you for joining us.
Thank you, everyone. Good night.